Breaking news, guys. Following my video yesterday, tech stocks have continued to sell off, with the likes of Facebook, Amazon, Google, and even Tesla selling off by over 7% today and over 7% yesterday. So what does this mean for the market, and what is causing this sell-off? Also, could now be a great time to buy the dip on some of these fantastic stocks? I think so. So in this video, I'm going to take you over my shoulder and look at the technical charts for 4 of my favorite stocks. They are Tesla, Amazon, Alphabet, and Nvidia. And I'm going to identify the buy points using technical analysis and Fibonacci retracement so you guys can get in these great companies at a great price and take advantage of this opportunity. If you're ready for that, let's dive in. So what has caused this recent sell-off? Well, the first major catalyst which I've identified is that there are a lot of earnings fears around cloud service companies. So as you can see here, according to Barron's, tech stocks are falling because of earnings worries at cloud service companies such as Zoom Video Communications. The stock market is an interesting place. Even if a company is not directly affected by a certain earnings report, there is often a knock-on effect across the entire industry. So this is one catalyst we are seeing right now. A variety of hedge funds have also unloaded a lot of their tech and healthcare stocks in order to cash in some profits. Hedge funds shifted away from market-leading technology and healthcare investments in the second quarter as they added bets on the cyclical recovery with larger positions in industrial and financial shares. According to Etsy Dweck, head of global macro strategy for Nactisis Investment Managers, he said that tech stocks and the overall market hadn't really had a bad day since June, so this is a healthy breather. It was never going to be a straight line up, but the long-term structural support for technology has not changed, and support for equities has not either. So basically what he is saying is that the fundamentals for a lot of these tech companies have not changed. And I agree. I think companies such as Amazon, Apple, Facebook, Google, and even Tesla have a bright future ahead. So now could be a great opportunity to buy the dip. Right guys, so let's dive into the charts. We'll kick things off at stock number 4, and that is Tesla, everybody's favorite. Now I did a video yesterday on Tesla, and I said about a few other of the large investment firms selling off. So this does contribute to Tesla's current sell-off, not just the broader tech market. So watch that video if you're interested in why Tesla is selling off. So here we can see here I've got a Fibonacci retracement on Tesla stock. This is an hourly candlestick chart. Current share price $389. It's down minus 4%. It was down around minus 7-8% just a few hours ago. So it has pulled back slightly since then, but it could drop again. So according to this retracement here and just a few support lines I've identified. So I've identified a major support here at around the $372 mark. So we're near that right now at 388, and it did hit this support previously and bounced back slightly. So that could be an indication that it might be consolidating here at this support. So 364 is where the Fibonacci retracement is stating that there's a support here. So with support lines, there's a big sort of misconception with them that a lot of people think that they're this definite line and it cannot go past that exact point, when really support lines are more of a support zone. So think of those as zones. So if we say support 1 is a zone between 364 and say 370, that could be an initial buy point 1. For example, if you're thinking of opening a position in Tesla, that could be a good opportunity, or even right now at its current price. So that's an initial point. If you're already a shareholder and you've got a significant portion, then maybe it's better waiting for an even further decline, if that may happen. So onto the second retracement here, we've got one at 348. So on the Fibonacci, so that's another potential opportunity. I did identify a big support here it's around 324, and that is also combined with the Fibonacci retracement. So for me, the opportunities with Tesla stock, the buying opportunities, you're looking at $326 here. That's in line with the Fibonacci, so that sort of zone. And then the first one is around 364. So they're the two major buy points I see for Tesla stock. Yes, it could bounce back from this point now, as it seems to be consolidating here, or it could decline further. We just don't know. No one can predict the market exactly. So some recent headlines as well. So the Tesla CEO met with the Volkswagen CEO during a German visit. So that could be indication of potential partnership. I believe they may be using Tesla batteries, which is quite ironic really, because everyone talks about a battle between Tesla and all the automotive companies. But now it seems like Tesla's just partnering up with them. Either way, I'm sure it's good for business. More technical analysis here. So according to let's look at the hourly. So on the hourly, we've got the oscillators are saying buy, and summary is saying sell, and the moving averages are saying it's a strong sell. So at the moment, the moving averages and the summary is saying that the stock is still selling off. So this could be a good time to watch and get in there. It's a good buying point. So that's Tesla. Now let's move on to my all-time favorite stock. Now this is a stock which I've actually been watching for a very long time. I have a small stake in the business, but I'd rather have a massive stake. And that is the giant, which is Amazon. So Amazon, currently $3,230 per share, down -4%. Fibonacci retracement, it was down around 7% as well, a little earlier. And I did manage to get in there. So as you can see here, with a few support lines I've identified. First support here, this is quite a strong support at $3,146. So around that sort of point, that is a good support. It did bounce off that point, and then it has retraced slightly. So that's an interesting one to watch out for. Another smaller one on the Fibonacci is 3264. So it's dropped below that already. That's another interesting place to look out for. My next strong point is right down here. So that's around $3,000 per share. Now at $3,080 per share, this was a significant point here where the stock consolidated back in August, and then again in mid-August, and then it could possibly reach that point again. It is reaching down. If we go deeper and look at the candlesticks here, there was obviously a large sell-off on this hourly chart. Another large red candlestick, a bearish candlestick, and then we have a green one where the buyers, the people buying the dips, the people like me and you, buying the dips have come back in. So that can help the stock to sort of bounce back up. The question is will that be enough? Or will the large institutional investors who are selling a portion of their stock to maybe rebalance their portfolio and cash in some profits overwrite these people? As a long-term investor in the short term, I like that to be the case. I like the big institutions, if they're rebalancing and it's not a fundamental issue with the company, I don't mind them selling off a portion, causing a little bit of fear among short-term buyers of great companies. They sell off, the stock drops to a nice level, and then the people that really have faith in a company and really know its long-term prospects can get in at a fair price. And Amazon is one of those companies that's just been flying recently, and I do believe it's next on the agenda for a stock split. So that could be extremely interesting. Rumors say this could be a 7-to-1 stock split. So that would entice even more retail investors to buy Amazon stock. Fantastic company. They've got so much going for them. So Amazon plans, couple headlines on Amazon. Amazon plans to add 10,000 jobs in Bellevue, Washington. So although the US unemployment rate is around 1 million people, Amazon is a company which has been hiring throughout this pandemic. This company is benefiting massively from any sort of health crisis or lockdown or potential lockdown in the future. And even if there isn't any lockdowns in the future, consumers have formed new habits. A lot of people prefer shopping online now than they did previously. Technicals, it's still in sell-off, so it's great news for you guys. Oscillators say sell, summary sell, moving averages say sell. So the company is still in sell-off. The stock is still declining, so it has a good chance to reach some tasty buy points. So that's Amazon. Keep an eye out for a good opportunity to get in there. Next stock, let's look at the next stock. This is Nvidia. This is Nvidia, the chip manufacturer, the artificial intelligence cloud company, which is revolutionizing the world. This company is getting involved with Mercedes. They're working on autonomous vehicles, artificial intelligence. I did a full video analyzing this stock, and I actually, at the end of the video, I said it's a great stock, just a little bit overvalued. We would need to wait for a dip. This could be a great opportunity. Check that video out. I did on Nvidia. I'll leave it in the link below. At the moment, $486 per share, minus 6.65%. This was actually one of the largest hit companies. It was down around minus 8 to 9%. I did load up on this stock just to let you guys know, full disclosure. One of the unique things about this channel, I did increase my stake in this stock. Let's look at the Fibonacci. So I identify these support lines for you guys. So support here, initial support line here, around, call that 475. So close to where we are right now. So I actually got in around this point, maybe even this point down here if it reached there. I think just as it reached around here. Yeah, so 475, that's the first support line, and that's due to this support here. It touched there back in 19th of August, and the Fibonacci retracement also points out this as a potential support. That's your first one. It has tried to push through this support here. Quite difficult to see. It has tried to push through there. That's when I sort of got in. But since then, some buy the dip buyers have got in. That was probably me and a few other people. And we've caused the stock to increase again. But doesn't mean it still can't decline even more. And it's still down it's still down nearly 7%. So it's not too bad. Second buy point, potentially, if it declines further, $450 per share. That's a nice strong resistance. Also in line with the Fibonacci. And then again at 428 per share, down with the Fibonacci. So there's three major points there I would say to look out for with Nvidia stock. Exceptional company. One of those disruptive companies which is just going to keep growing into the future. And finally, the last stock, and another one of my favorites. I have a large stake in Google, and I'd happily allocate even more of my portfolio to Google, or Alphabet as it's called. So currently at $1,500 per share. It's actually been one of the least affected by this whole tech decline. So it's only around 4%. Nvidia's been hit the hardest from the companies I've looked at. So Google. Let's look at the technicals for a brief second. Technicals here. So it's currently at buy. So apparently Google is rebounding. Alphabet is rebounding. So these technicals, oscillators are saying buy, moving averages are saying buy. It's starting to rebound. I believe that's from people buying the dip. So as you can see here, it hit my support, which I put in earlier today. So 1,500 per share. It hit my support line. That's when I added a small percent to my Alphabet stock. So that was the first buy point to get in. Second buy point, if it broke that, is around 1,470 per share and down to 140. So they're the two major points for Alphabet. I can't imagine it declining too much, to be honest. It's an exceptional company, and as the great Warren Buffett says, it's better to buy a great company at a fair price than a fair company at a great price. And Alphabet is a great company, as is Amazon, Tesla, and Nvidia. If I had to list it in order of my favorites to my least favorites, Amazon and Alphabet definitely up there. So as you can see on the MACD, it's just had a crossover. So that indicates a reversal is coming for Alphabet. So it does seem like a stock that will spring back. Now, one of the unique things about this channel, and something I always get asked, is, Ben, what are you buying and what are you selling? Well, in this case, I've actually increased my stake in Amazon just because I love Amazon. I think it's got so many different avenues, from Amazon Music to its streaming service to Amazon Prime, and it's the king of e-commerce. And I have a feeling that they will be next in line for a stock split. Rumors suggest that this could be a 7-to-1 stock split on Amazon. I definitely believe Amazon can reach a $2 trillion market cap and rival the likes of Apple. So what are your thoughts on the recent tech sell-off, and have you been buying the dip, or do you think this is part of a larger crash? Let me know in the comments below and I'll join in the discussion. If you found some value in this video, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.